Hey friends, we got the volume working. Hope you're having a good Friday. Long weekend coming up. No trading on Monday in the US. We'll get started in just about 30 seconds here. Broader market bulls trying to head back towards the high of the day, but some key resistances to still look at. Where are y'all tuning in from? Looks like we have a bit less than normal. People already heading out for the long weekend. So we can see on the right here on my list, we got a whole bunch of red, a little bit of green, but certainly for the most part, it's been a pullback day. Missouri, Austria, Ireland, Dallas, Nashville, Serbia, Africa, Sweden, Belgium, Johnson City. Thanks, Felipe. So, appreciate the likes and the shares and all that, and all of you who keep on tuning in. Let's look at the Nasdaq. So the Nasdaq just broke a 15-minute equilibrium bullish. Overall, it's a very tame day. Not a whole lot going on. So there's our bull break. With the 15-minute bull break on the Nasdaq, we're going to zoom out, and we're going to look for anything under the high of the day to be an hourly lower high. And essentially the way that I'm just viewing the range that we are currently in, I'm looking at a low, high, higher, low, topped out here, bottomed out there. Anything under the high of the day is just another lower high remaining within this tightening range. It's not picture perfect, pretty, but certainly a tightening range is forming, and it's really just a daily inside bar if we want to simplify it. So sideways range, lower volume, I assume, heading into the holiday weekend. Yeah. 2 more hours to go, and I don't think anything's drastically going to change here on the Nasdaq. Maybe we'll close near the high of the day, maybe we'll close near the low of the day, but it's pretty tame and contained. So as I've said many times recently, I believe that July is going to be a pretty volatile month for markets in general. And I don't get that sense from the crypto space. I get that sense from the other places that I look around markets. And again, the biggest one for me is the VIX. And again, the VIX is the measurement of market volatility. And oftentimes it is inverse to the market, where if the market is dropping and there's fear, the VIX is spiking. The VIX's biggest spikes up are when all of our major sectors, whether it's financial, tech sector, healthcare sector, they're all dropping and at the low of the day at the same time. Those are when the VIX has big green days. So we're watching this tightening weekly range, and it's been tightening up for many months at this point. About 4 months. It's going to break. And when it breaks, we're going to be looking for volatility to spike market wide. And if we go back and look historically, we can see some times where things got tight, and then we saw volatility as the tightening ranges broke. And you can see when things get real boring, eventually you get that big spike up, which is when the broader market pulls back notably. But again, I'm just keeping a close eye on the VIX for the next, it doesn't have to be July. Let me show you what I mean, because if we start July and set a weekly high or low here, and then we bounce and set a lower high, it could take us to the end of July and then have us really tight. But I'm looking for volatility to pick up. And along with that, there's other stocks that I'm watching, like Tesla. 2-day time frame, look how tight we're getting. So we've been within this tightening range for the entire month of June, and that's Tesla, that's Google, and that's Amazon. And those are 3 names that are some heavy hitters as far as the weight that they carry in a bunch of these different ETFs that are trading in the market. So when all these ranges break, when the VIX breaks, I expect some volatility. It might align with earnings season. We'll have to see if that's the case. But we know it's coming. So we want to have game plans prepared. So in the short term, we know the bears have absolute complete control. Where we are in a downtrend on all time frames. And we had a spike last night heading into the close. This was really just a big push up out of nowhere that led to some short-term short covering into the close of the quarterly candle, the monthly candle, the daily candle. They all close at the same time. And we got this little pump right before it. So if you look at the 1 month candle from yesterday, that little lower wick is literally that hourly move. And it was very short-lived. Just a quick pump up, and we gave it all back. And we didn't confirm any trends. As we know, if any move is going to stick and have follow-through, once it tops out, you got to set the higher low and then continue to put that pressure on bears. Otherwise, they get real comfortable just waiting for the trend to resume itself, keeping that bear control. So where we're looking in the short term right now on Bitcoin, and then we'll zoom out, bigger picture. 2-day time frames are key for me, but 4-hour inside bar. So if these inside bars break bull, we're going to watch for a tightening range. We've got the low, the high of that fast spike. Now we're attempting to set the higher low. If the inside bars break bull, they will be set. And then we'll scout a lower high, anything under 20.9. Entirely possible that we start this weekend. Obviously, the bulls have to prove it in the short term, but could start this weekend with a tightening boring range, waiting for that to break. When we last checked in 2 days ago, we were looking for the 4-hour bounce to take place in everywhere, essentially, and it did. It was just extremely weak. We had Bitcoin broke bull after I cut that stream, rejected from EMA 12, ended up being a bear flag. And so we had short-term bounces. We were looking for bull moves in the short term, but just to be looking for those to set lower highs. And of course, they rolled over pretty significantly for fresh lower lows. So 4-hour tightening range, if the bulls can prove it here in the short term. Whether or not the bulls can prove it in the short term is likely going to be dictated a bit by the broader stock market over the next 2 hours. So a clear tightening range potentially shaping up. So the 2-day time frame, I look at this chart, and it's the same thing. If you remember back on this bounce when it initially played out, we saw a big enough bounce that we were anticipating a 12-hour higher low. And so we were looking for entries on that 12-hour higher low, anticipating that a higher low was the most likely scenario due to the size of the bounce. Aggressive bulls can look at the 2-day time frame and come up with a similar conclusion. Now, I personally am not going to be an aggressive bull with where we stand right now. I can look at this 2-day chart and say, well, that's a big enough bounce that I can anticipate that we hold support at least initially. And there's altcoins that I would have more confidence saying that on, and we'll look at some of them, but they have a lot more space to work with, and they're holding on a lot better on their 2-day time frames. Bitcoin came pretty close to that support, and we came $1,100 away, which is what? Quick math, 6%? But some altcoins have way more space than that. 5.6%. So the only hope for the bulls in the short term is seeing a 2-day higher low shape up to just defend the low. And that 4-hour tightening range, if we get it, would have to break bull for a 2-day higher low to be set. So the reason I'm not looking bullish for the 2-day higher low is I already have a little bit of Ethereum exposure. And again, I'm just leaving some position open, a very small amount of the bounce trade that I played. And that's just to ensure that I have some skin in the game, that I'm constantly checking things. Because as I have mentioned, I am going to play Ethereum. I'm going to trade Ethereum until the weekly bounce plays out. Whether that means we drop to fresh lows and I start getting aggressive again on those fresh lows to build a position, I will do so under certain criteria. Remember my criteria leading the way down. I'm not looking bullish unless we are at extreme historical RSI levels aligning on all of our time frames. I need it. We know we have it on the weekly. I need it on the daily, the 12-hour, the 4-hour, the hourly, the 15-minute, the 5-minute. If they are all down around 20 or the teens, I'm starting to scale in. Otherwise, I have to see the bulls prove to me that I should be looking for entries. And so right now, neither of those criteria are taking place. Now, if I had been on a nice win streak recently, and if I had no exposure as a bull right now, I would be looking to establish some altcoin positions for a 2-day higher low. Of course, placing a stop level and keeping my risk nice and defined. And I'll show some examples when we get to some altcoins as to how to play that out, because support's a bit too far away to be going off of. So essentially, if I'm looking for a higher low, I look for enough short-term indication to tell me, let's just go right into it, and then we'll look at our other coins here. Let's just say sand. I look at sand on the 2-day time frame, and I can say, okay, a 2-day higher low is the most likely scenario for me. Could we drop to a lower low? Absolutely, but not without big-time bear volume. And so with where we stand right now, the low of this pullback, we would need another 23% drop just to get to that low. So I look at this and I say, okay, well, that's an indecision candle there on the 2-day time frame. That could be the higher low shaping up. I need to zoom in. I need more details. I can see the 4-hour time frame. Okay, 4 hours shaping up. 12 hours trying to set a trend change. We would need a 12-hour higher low and higher high if we're going to say our 2-day higher low is being set. And I'm using the 2-day rather than the daily just to condense it down. It just has a bit more clarity for me. So the way that I personally take this kind of trade setup, and again, I'm not personally taking this trade, but if I were, I would be scaling in on this 12-hour consolidation. Essentially, the trade would be around the assumption that this is the 2-day higher low already being set. Because if I look at the 2-day time frame here, I can't play off 73 cents with my stop under that level. That's way too far away. That's way too much risk. It's not worth the risk to reward. Let's just say that, I'm in with a 108 average where we stand right now. That's a risk of 30% before I stop out. Now, if I'm using this level and saying this is either the 2-day higher low and I want a bullish position, or I am wrong and I stop out, my stop is 95 cents. It's a risk of 13, or the stop loss would be at 95, which is a risk of 13 cents. So that's a difference of 13 cents risk versus 35-cent risk. It's almost 3 times as much risk if I'm playing off that other level. This is how I trade flags. Not calling this a flag, but I'm saying I will watch the consolidation. I will say, if this is going to be a bull flag, that's the higher low. It has to already be set. And so I play off of that level because a bull flag is far enough away from support. I can't play off the support that we came from. I have to play off of a new level. And so I wait for the shorter term time frames to develop enough of a shift to tell me this is either that higher low that you're looking for, or you're going to stop out and be wrong. So that is how I would approach the 2-day time frame. I would scale in maybe 2 positions on 12-hour consolidation and then stick my stop under 95 if I wanted to be an aggressive bull. So that's the only trade setup that I like for bulls to be looking at this point. That's the time frame, and we need 4-hour and 12-hour to shape up for the bulls to see 2-day higher lows set. A patient bear is saying, great, I hope you bounce, because I'm going to be waiting for a daily lower high. So Bitcoin here, anything under 21.9 is a daily lower high. Maybe we already set it with that big, fast, quick bounce there. But if we go down our list and look at a bunch of altcoins, there's a whole bunch of names that are just looking for a daily lower high to be the result of the next bounce. So patient bear is scouting for daily lower high re-entries. So you need to determine which direction do you want to be looking, and do you want to be conservative or aggressive. If you're looking bullish and you want to be conservative, you're not doing a thing. You're waiting for bulls to prove something to you or some other criteria. If you're looking bullish and you want to be aggressive, you're looking for the trade setups that I just talked about on the 2-day time frame. If you are bearish and you're looking to be aggressive, you're looking for a Bitcoin. You're looking for an entry short, whether it's on Bitcoin or an altcoin, for the next 4-hour lower high. Because I'm anticipating a 4-hour lower high on Bitcoin is at least the likely initial scenario. That's what an aggressive bear is looking for. And a patient bear is looking for a daily lower high. So determining whether you're aggressive or a patient is key to determining what time frame do I want to focus on. And what setup am I going to be waiting for. And we got a free ebook about building a comprehensive trading game plan. We already put this one out a few months ago, so you may have already seen it. Drop in the link in the chat, and I'll put that link in the description of the video as well. Just a free ebook about establishing a trade game plan, because again, you need to have a game plan for both directions. You need to have a game plan if 2-day higher lows are set and bulls show up for 4 days, and you need to have a game plan if bear control remains and we head down to test our recent lows. Bitcoin, Nasdaq, correlation, or I should say relative strength, relative weakness chart. We see that candle there. That's just that spike, that 2-hour spike on Bitcoin. If daily EMA 12 is resistance here, it's a tally in the bear column. Again, we have to see Bitcoin start to show relative strength if it's going to do anything. Relative strength is essential. Look at SPY. This is what SPY has done on the daily time frame. Again, the S&P 500 the last 4 days. I noticed relative strength in the biotech sector, and look what the biotech sector has been doing. It's a very big difference. So I've been trading the broader market bearish, and when the broader market looks due for a bounce, whether it's on the 15-minute or the hourly, or I see a little short-term bull setup, I'm playing bullish in the biotech sector. So it's a very powerful thing when you have a bullish correlation. This is XBI divided by SPY, and it's been stronger for weeks. We have to see that happen with Bitcoin comparative to the broader stock market. If it doesn't, there's a lack of confidence. Ethereum, 2-day time frame, same deal. 879 is key support. The bulls must hold that level and shape up a 2-day higher low, and then we could potentially trade within this tightening range for another bunch of days. But we need the 4-hour back to the bulls. It's trying to shape up. We got to get over the 1115 high of that last night's spike. If we do, 2-day higher low potentially shaping up. Bears will be scouting a daily lower high, anything under 1280. ETH BTC, still in a daily uptrend. I'm watching this very closely because if this is a daily head and shoulders here where essentially we go from a daily uptrend on this bounce and then lose the higher lows, our weekly lower high is set. So that's a potential weekly bear flag on the ETH BTC pairing, and I would anticipate if Bitcoin's going to break the 17.5 low and Ethereum's going to break its low, that Ethereum's going to be dropping harder and faster, and this could absolutely potentially be a weekly bear flag. So keeping an eye on those daily higher lows as well, and if I'm looking bearish for an Ethereum daily lower high, if I'm a patient bear waiting for that daily lower high, waiting for some bounce follow through first, and then watching for a loss of 4-hour uptrend to gain some confidence as a bear, I want to see the BTC pairing confirm a daily downtrend as well, if it's going to make me confident. So again, I use the BTC pairing so often, but it doesn't always dictate the trade that I enter, but it can dictate whether I stay confident in that trade or not. Let's say I make a bearish entry on Ethereum for a daily lower high, and ETH BTC keeps setting daily higher lows. That tells me, uh-oh, that's a red flag for your trade. That is not what you wanted to see happen. Take some off, maybe exit the trade, move your stop level closer. So just clues, even as the trade is progressing, to be keeping an eye on. So sand, again, we looked at the 2-day time frame. The BTC pairing is still a daily higher low pattern. It would definitely be a big red flag for the bulls if this current low were to break. We need to tighten up here and keep the daily EMA 12 and keep this going if the bulls have a chance of a 2-day higher low on sand and potential holding the recent low to try and keep a tightening range. Essentially, at this point, all the bulls are hoping for is to just keep a tightening range, hold the recent low, and tighten up into next week. Atom is showing a solid amount of green today. So Atom's daily bounce is following through pretty notably. So we're watching two scenarios. We're either going to fail the high of 875 and then confirm the daily downtrend, heading back to the recent low, or we're going to break that resistance and keep the daily uptrend, or I should say, get our first daily uptrend and keep the weekly bounce going. So you look at this chart and no other altcoins look like this right now. Not many, maybe one or two, but the only way that we can break that resistance after that size of a retracement is on increasing volume. So the bulls are bringing that increasing volume, and if you don't have that increasing volume, you're not going to be able to make up that much ground to break that resistance level. So keeping an eye on Atom, and Atom BTC breaking out as well, higher high. So again, it's just ideal scenario, holding EMA 12, increasing bull volume, higher high already hit, which shows us the BTC pairing is stronger. So Atom is definitely positioned well compared to other altcoins in the short term, but still a ton of proving to be done. But if we're going to be looking at 2-day higher lows forming, every single altcoin bull wants to see a daily bounce with increasing volume to gain some confidence. And so Atom's 2-day chart, the higher low is set, and now we're trying to, and when's the last time Atom has seen a 2-day higher low and higher high? And your answer is Hasn't happened since April. So 3 months it has not happened, and bulls are trying to shape it up. And again, if that confirms, that starts to negate the potential of the weekly bear flag and tells us that the weekly bounce isn't done yet. So if the entire altcoin space right now looked like Atom, the bulls would start to be gaining some confidence. But it is just, one name. Everybody would have to see this kind of setup happening. And obviously that means Bitcoin's got to be taking charge here. So it's nice to have that one example to say, okay, this is what my coin needs to look like if the 2-day high or low is going to form with any kind of confidence. Stock market bulls getting a little bit of follow through here, heading back towards the high of the day. Bitcoin trying to set up that 4-hour higher low. All right, I'm reading the chat room now. And I'll interact with you all if we get 100 likes. That's the new criteria. We need 100 likes. Click that button, please. All right. So the miners, the crypto miners are trading a lot more correlated to the broader stock market than Bitcoin recently. That's my observation. But obviously the fact that we just dropped to lower lows on the daily time frame is showing us that the miners are weaker than Bitcoin and the miners are weaker than the broader market. I mean, MARA divided by SPY, very bearish at the lows. MARA divided by BTC USD, well, it was weaker a few weeks ago, but obviously weakening significantly the last 4 days. But at fresh lows, and daily EMA 12 has been rejecting the price here for 3 months of complete bear control. Riot, same thing. Coin, same thing. Very weak. $109 likes. Way to go, team. I won't say an inside bar is like a reverse Uno card, because a reverse Uno card reverses direction. An inside bar just shows you a tightening range. You can inside bar and then continue down. So an inside bar tells me that there's likely an equilibrium happening on shorter term time frames. So looking at Link, weekly is looking for a higher low to form. Link USD, what's the 2-day look like? So it's trying for the 2-day higher low compared to 540. Came fairly close to it. 4-hour, trying to tighten up, have to break the 4-hour bull for the potential of a 2-day higher low. Essentially, the way that I'm going to cycle through these time frames into the weekend, if the 4-hour time frames break bull, we zoom out to the 12-hour and we scout a 12-hour lower high because there's tons of space for it still. Then if we change the 12-hour trend, our 2-day higher low is set. That's essentially how it would shape up if it is going to shape up. And again, I don't have high conviction or confidence that bulls can pull this off, or I would be building positions right now. I also don't feel like being tied to the computer in my phone during the long weekend. That's always a factor these days for me personally. Has to have even extra high conviction if you're going to get me having to check the computer often during a long weekend, that's for sure. Boot and Trolls, thanks Tom. How long should we be consistently profitable paper trading before trading live? I would say start trading live soon, just with very small amounts. Because the step that you go to paper trading is great because you get recognition of patterns and you watch how price action develops and you get a feel for markets. But the missing variable is emotional interaction, your psychological, emotional turmoil that is going to come, that will happen. So you're only going to feel that if you have actual skin in the game and actual capital in play. So even if it's $10, even if you're trading with $10, put that money in play so you can start to observe your inner workings as you're establishing trade game plans and as you're watching price action. High of the day test on the S&P 500. Bitcoin. Still work to do. Trying to shape up an hourly inverse head and shoulders. Have to break 19,650 if it were going to confirm. Gala. Gala 2-day. I go instantly to the 2-day because I know how all the other 2-day charts look because that's what I've been looking at. And I can see it is clearly weaker. So we're testing that low. It is still holding, but we have way less space to work with than most names have right now. 4 hour, trying to hold the base of support, but anything under 5-6 is just a 4 hour lower high. EMA 12 resistance, very clear 4 hour lower high pattern. So I can say Gala is weaker, and I know without looking, Gala BTC is showing us weakness and probably at lows. Recent lows, that is. So clear 4 hour downtrend on both pairings and essentially testing daily support while most names are not yet. Do I use CPR? I don't know if you're referring to saving lives or if that's trading. If it's trading related, no. Thanks, Maximilian. How do I wrangle my emotions and stay objective? Practice doing it for years. Experiencing all the highs and the lows. I mean, like anything, if you do it enough, the first time you do something, it's exhilarating. If you do it 10,000 times, it's a lot less exhilarating. So it's experience. Through experience, you learn control. Same as so many aspects of life. You learn so much psychologically and emotionally going through relationships. And every relationship that ends and then goes to a new one, hopefully we're carrying those lessons that we've learned into the next one. We have to do that with trading as well. Constantly observing, self-reflecting, and improving ourselves. It's constant striving for improvement. Because without that, you're just going to be stagnant and you won't make it. Especially with such rapidly changing market environments. That requires us staying on our toes and staying on top of ourselves, because all it takes is one shift to completely throw everything off kilter in terms of a shift in the market environment. Should you look for trade setups this weekend or enjoy your weekend? That is a very personal decision. Do I hold significant position on crypto exchanges in order to trade effectively? It's usually mostly cash. And the cash is protected, 250,000 of it by FDIC insurance. So that helps me a bit with what I have on there. But yeah, I've just accepted the small risk of whether it's a hack, whether Coinbase or whoever. I might go to Binance US soon, but wherever the exchange, if it goes insolvent, then I lose anything that's over 250,000. You know, these are small risks that have to be accepted as part of the game. But I've been withdrawing funds from my crypto account since 2017. You know, from putting funds on in May 2017, I've only been withdrawing. And I withdrawed a good amount yet at the end of last year as well. And again, that's just keeping my crypto account secondary to my stock trading account with its free fees. Binance, sure. XMR, 2-day, how does it compare? Scouting the 2-day higher low. So again, so many of these altcoins are doing the same thing. Yeah, if you observe my analysis that I just did on Bitcoin and you can't apply it to the altcoin that you're watching, then that tells you that there's a lot of work that needs to be done in terms of more observing and more look at the Bitcoin chart, pull up your altcoin chart and apply it, because this chart is extremely similar to what Bitcoin is currently doing on all the time frames that we just went over. So there's nothing for me to add to that analysis. It's the same thing, just slightly different. You know, maybe the percentage distance that we have to cover to get back to the high is slightly greater than sand. But again, they're all the same thing that I was just talking about. And Binance, how does it differ? A lot more space for a 2-day high or low. Well, not a lot more. Percentage-wise, it's fairly similar. A little bit more. 4-hour, trying to set up a trend change. If we do, we zoom out, we scout the 12. Oh, no, the 12 hour is already developing. So that's a little bit different than Bitcoin. But if we confirm the 12-hour trend change, our 2-day high or low is set. That's essentially the setup that we currently have. So explaining the higher lows and lower highs. So I've got a real in-depth video on our TheChartGuys website, and that's not public, but that's the best video that I've made to explain it. I'll have to make another one to just really break it down. But essentially, let's go real quick crash course. I watch the higher low every candle pattern. So what do I mean by that? I mean by on this bull move, we have a higher low every single candle. When that pattern breaks, and that's part of the stair-step strategy, which we do have the video on YouTube on, but when that candle breaks, consolidation is underway. Now I'm watching the lower high every candle pattern. When that pattern breaks, our hourly higher low is now set. So the hourly higher low, inside bar here, bull break. We break the pattern of a lower high every candle, so our pivot point is now 217.70, and that's our hourly higher low. We then bounce for multiple candles. We fail to break resistance. We pull back. We lose the pattern of a higher low each hourly candle. Now we've got a pivot lower high set. We have a lower high every single hourly candle. That pattern breaks, the hourly bounce is underway. But anything under 225 is just a lower high. I'm watching for the higher low every hourly candle pattern to break to tell me a new hourly lower high has been set. So that is the 60-second version, but there's definitely a 30-minute version. What would be proving it to me? Honestly, at this point, I would need a tightening 2-day equilibrium to shape up for a bull break. Or at least having some altcoin leaders break first. I would need to see, I mean, there's a list. There's a list of puzzle pieces. I need the Bitcoin divided by Nasdaq relative weakness chart to start showing me relative strength. I need confidence that the broader stock market bulls are setting a 2-day high or low. That's the other thing. Look at the S&P 500 futures. We're scouting the same thing. Can it form a 2-day high or low compared to the fear low? It's attempting to, just like all these altcoins. We're doing the same thing. The broader market's going to dictate this. So I'm watching the broader market. I'm watching the VIX and it's weekly. I'm watching the dollar. I'm watching the 10-year. I'm watching what altcoin bulls do if some are leading and showing us the way first. Those are all things that can start to give me confidence if they start showing me things that have me putting tallies in the bull column as opposed to the bear column. So what's the dollar doing? Well, the dollar's still real strong. Yes, we're rejecting from resistance, but we're not breaking support. So right now the dollar is a tally in crypto bears column because a strong dollar favors crypto bears. We have to see dollar weakness to move that tally into the bull column for the crypto bulls. And we're not close to doing that. Well, there you go. So Andrew is in his first 100 trades and broke his rule with a stop loss. And so now bag holding and facing potential liquidation. So yeah, you're going to learn those lessons. And eventually, if you are disciplined enough, the pain of bag holding will become familiar enough that you will say to yourself, all right, I am not going to let that happen anymore. I enjoy the taste of fast food. Taco Bell in college, Burger King. But then I learned these meat sources come from terrible farms, and this is terrible for me. If it were good for me, I would eat it all the time. And if it came from a different place. But I have to have the discipline to knowingly put myself in a position to not eat those things. I have to actively put myself in a position to not bag hold. And you do that through stop losses. It's the same thing. It's like any avenue of discipline in life, whether it's working out, whether it's eating healthy, whether it's other avenues of self-improvement, whether it's working on your anger when you're sitting in traffic, whether it's working on your patience with your children, whatever it is, it's the same vein that we have to apply to trading. And if you don't have those qualities, you won't make it as a trader. And you can train and you can learn those qualities, but there's no such thing as a long-term successful trader that doesn't have discipline. Thanks, Andrew. Glad to have you. BITI, again, as we talked about, this is the inverse ETF. And its volume is plenty, 60 million, $40 million a day. So this is in an uptrend as Bitcoin has been pulling back since its creation. And again, this is just one way to hedge or one way to play bearish. What's the most likely scenario on this pullback? A daily high or low, in my opinion. So a patient bull is waiting for a daily high or low on this chart, just like a patient bear is waiting for altcoin daily lower highs to be the result of next bounces. So sand, anything under 135 is a daily lower high. So that's what a patient bear is waiting for on altcoins. Would I consider trading with leverage on exchanges in order to limit my capital that is on an exchange? Absolutely, but it would require hitting the grind in terms of getting comfortable with that trading style. Just like trading options is not like trading common shares. There's tons of similarities. It's 85% similar, but it's 15% completely different. So trading with leverage, there's a learning curve there where like getting comfortable with the position size, getting comfortable with where you're going to stop out or where you would liquidate. Like those are all things that would require putting in time and experience to get comfortable with, because it's obviously trading with leverage is different than trading with just regular old capital. But that is one strategy to try and mitigate some exposure, absolutely. How much capital would I recommend to start? I started with $3,000. It's different for everybody, but a small enough amount where if you lose it, it's no biggie, to allow you to learn and practice. You certainly don't want to be trading with all your capital right out of the get-go. Fraction of a fraction of it. All right. So SPY is still testing. S&P 500 still testing the high of the day. Have not broken it yet, but we're right there. Bitcoin trying to shape up the hourly trend change back to the bulls. If not, it's just an hourly equilibrium that's tightening up. Holiday weekend. Only hope for the bulls is shaping up 4-hour time frames for 2-day higher lows to try and shape up. Bears are watching for daily lower highs to be the result of the next bounces. And the burden is on the bulls. I appreciate you all tuning in. Don't forget to do good things. And we will see you soon.